Hey everyone, this is Shai with you, and we're looking at the settlement dated the 27th of July. And this is the Nifty futures chart on your screen through the market profile. Let's dive in. Let's look at what is expected in the week to come. So you have these four profiles on screen visible to you. This is the latest one, the Friday, and we call this a 313 profile in the Nifty futures. This is the Nifty futures on your screen. And prior to that, the Thursday settlement was the one which drove the index to all-time high, right? But there were telltale signals even in that up move, and you can see this pink line over here. We call this the VPOC, the POC, and the POC had migrated right up to the top on that move of Thursday at the close. And that to us in market profile always tells us that the market was booking a long inventory and was looking for a move which was gonna end around that point of time. So the VPOC had moved higher into the close, and that was the signal which we wanted. But that was just a signal. The confirmation of sellers assuming control came in because this was a trend day, and we split the profile. You can see that it was higher highs, higher lows all through. And the trend day VWAP was this green band which was around 19,894, and that was the reference line we had for the Friday open. So here's the thing which was expected at the open, considering that Thursday value was higher, and even though there was profit booking at the highs, what is specifically accepted from expected from a trend day profile is the fact that buyers have to defend VWAP, right? And that is a known truth of a trend day. The trend day VWAP is more important than any other VWAP, and the buyers are specifically required or to required to hold that VWAP. So this did not happen on Friday, and as a resultant, we got a move lower. And the move lower also has a story to it, and it has a responsive buying pattern, a small responsive buying pattern at the lows. So overall, if you look at the week in the Nifty futures, and I'll just pull up the weekly futures chart. Through that, simply to go to this W at the left bottom, and you get a weekly profile which is around 19,800. It is centered, and we call this a Gaussian curve on the weekly time frame. So what does this Gaussian curve tell you for the Nifty futures? This tells you that the market would be looking to range bound in the coming week, especially into this last settlement of July, 27th of July. The market is more likely to hover around 19,800. That does not mean it's going to stay at 19,800 for those 5 days which are left in this coming week, 4 days which are left in the series settlement, but it's going to be moving up and around 19,800, and eventually should gravitate towards 19,800, making it into a pivot for the week. So we for one at VTrender would not be looking for specifically driven moves away from 19,800. The idea would be in the coming week to keep looking for mean revert patterns, especially as we move towards 20,000 on the higher side and 19,600 on the lower side. The market is expected to meet responsive buying patterns and get back to about 19,800, 850 kind of a zone by about Thursday, Friday. So that is the outlook. Specifically, if you want to talk about levels, we would be going down to about this zone around 19,540, where the previous value area high is. This is the zone which the buyers are expected to hold, 19,540 on the lower side. And up above you can add a filter about 20,000, because this is in the Nifty futures and unsecured high in the Nifty futures, unsecured because the top is not really confirmed, and the Nifty is expected to go even further, right up to about 20,000, 20,060 odd kind of levels. So those are the levels I'd be watching out for in the coming week, and the idea would be to play a range bound movement based on what the market is telling us at the moment here in the Nifty futures. So this is the Nifty. You can of course look at the monthly also. So to look at the monthly chart, the best thing to do here would be to go in for a Nifty spot and look at the monthly series in the Nifty spot, and you can work up these TPOs to have a better look at structure. But what we've done is we've come out of this there was this pattern which was hitting the multi 52-week highs over here around 19800 odd levels, and we broken up through this tail in this month of July. So progressively if you're looking at the auction, this auction is steadfast and strong above 19377 19400 odd levels, and it is still up to dip buyers to show up. Now, having said that, the market needs to do a little bit more over here, and I mentioned this before also. The target of this breakout is in that zone around 2800 odd levels. So there is still a lot more upside left, but it's not something which can happen in one series or two. This is a multi-year breakout, and it's gonna take some time. You have to play with the benefit of time if you are looking at this profile from a long-term point of view. But with us as traders, we trade weekly settlements, and there's no point specifically talking about 21,000 and 24,000 and 30,000 odd levels in the Nifty or even the bank Nifty for that matter, because most of us as traders do not trade the contracts to get into those kind of levels, right? It's a different story if you're in stocks and you have a portfolio and you need to know where the long term outlook is. But for us as derivative traders, we need to know precisely what the market is going to be doing for a weekly expiry, which remains our focus, which is what we like to do. We like to know what are the possibilities, what are the probabilities that the market could work into a situation for the next 5 days. As long as we have that thing figured out, the rest of the work is done for us. So here we are going to be talking about levels, and we are going to be talking about reference areas, but they, let me remind you again, are specific to a certain date. I'm no way saying that the index is going to be doing X amount by without quoting a date for it. Everything which we talk about over here has to be seen against a level and a date which is going to give into it, right? So this is the Nifty, and you can go and look at what has happened through the year also, and this is the yearly profile which would be coming up on screen. So it's got something more to load. So this is the yearly profile, and as you can see, we moved out of this composite over here. This was where value was developing in, and it was that zone around 17,300. All of last year the market was trading around this level, and we've seen a convincing breakout which is still developing. Because this took about 2 years to consolidate, this breakout could take up to about 6 months also. So we'll see how it goes per that time theory. I'm expecting this market to go even further, provided we do not come down below these levels of around 18,600 level and put initiative sellers over there. So with this as a stop, the market is expected to go higher towards 20,800 and beyond, right? So let's come back to where the bank Nifty is going to be in the coming week, and I'll draw up the bank Nifty futures. So what was interesting in the bank Nifty was through that up move of Thursday. You see this POC line over here, the pink line, that stayed down. I just showed you the Nifty futures chart where it had gone right up to the top. So the bank Nifty was a proper value area, and the POC was down at the top, which meant that there wasn't any profit booking of longs happening. The move was definitely a short covering move, and the resultant is this particular profile in the bank Nifty is higher than Thursday's profile. You didn't see that case in the Nifty futures for the simple reason being the position of the POC, which told us that there was long liquidation happen. So this is the information which the market profile can give you, and can tell you a lot more, okay, about the story, okay, which is developing in. But coming back to the bank nifty, we've seen, okay, that consolidation, okay, beginning up over here post this short covering move, and there's nothing major to take away from the profile of Friday. The buyers, okay, need to do a job above 4150 odd levels in the coming week. This profile by itself, okay, tells you very little, except, okay, that the higher open, okay, did not see a lot of high demand, but there is no evidence yet that the seller is aggressive. He was whacked out of the market on Wednesday and Thursday. No evidence yet that he entered the market on Friday. And there is everything to believe, okay, that as long as these 4150 levels, 4100 odd levels are respected in the Bank Nifty futures, this is an index, okay, which can go even more higher. Let's look at the weekly profile. And again, we'll be looking at the Bank Nifty futures, right? So it's more like a double distribution pattern. So this is, okay, the more important thing. In the 2 weeks prior to the last week, the Bank Nifty was consolidation. It was expected, was in a consolidation. It was expected that it would come out of that consolidation and put that move higher, and that has happened, right? And you have this LVN, okay, around 45,860 odd levels, which if you're a swing trader, you need to mark out. But specifically, okay, the Bank Nifty has to hold up above 45,630 to keep this move of last week alive. The VWAP and the POC of last week's profile needs to be protected by swing buyers to keep the Bank Nifty momentum up and up on the upsides, right? Let me just look at what the Bank Nifty has done. So if you're wanting to look at monthly and beyond time frames, we recommend, okay, that you look at Bank Nifty spot TPOs. We have this Bank Nifty spot volume, which is the volume aggregated of the current futures added to the Bank Nifty spot. But the recommendation is that you go, okay, with Bank Nifty spot TPOs. You will get a monthly profile. You will get a monthly series profile also. In the Bank Nifty spot volume, because, okay, we trade with transacted volume of the current month's future, you would not get a monthly calendar level. So if you want, okay, those calendar options, it's best to work with Bank Nifty spot levels. So this is the Bank Nifty spot for the month of July, developing over here. So yeah, a pretty good pattern. We moved out of the last 2 months, okay, of consolidation. That was evident in the weekly profiles also. And yeah, the POC, okay, is right lower. The VWAP, okay, is up over there at 45,140. So from a multi-month perspective, this profile, okay, is still creating value higher, and you can say on a monthly time frame that the buyers are in control of this market, right? Quickly, okay, let's jump, okay, for a top down approach, okay, through the yearly charts also. The Bank Nifty on the year where we are positioned for 2023, right? So 43,920 is that POC, 44,000 odd levels. You would expect, okay, the Bank Nifty to stay above it for the rest of this calendar year, right? So we spoke, okay, about what can possibly happen. Have a look at what the spectrum, okay, is showing from an option inventory point of view. So the spectrum for the Nifty, now this is the Nifty spot. This is not the Nifty futures. The spectrum, okay, is projecting a level of 19,500 on the lower side and 19,900 on the higher side. Now this is, of course, the spot levels, and as you can see over here, this is the zero gamma line, the blue dotted line. And when the market, okay, is above this zero dotted line, you can see, okay, that the market is long gamma. When you say long gamma, that means, okay, there is a market, okay, which is bought a lot of long calls and long puts. So that's a long gamma market. But the minute, okay, it goes down below the zero reference line, the gamma zero level, that's a market, okay, which is either short calls. You can say it's a short gamma market. So it's either through short calls the market is driving down, or the market has got some short futures. So what really happens is there are traders, okay, who are short puts also, and to manage those short puts, the market, okay, goes in with short futures. And short calls are obviously, okay, the easy way, okay, to go into a zero gamma market. But as long as it stays above this yellow line, the big traders are not gonna aggressively add short futures into the market. So pay attention, okay, to this market visualization yellow line. As long as, okay, this the market, okay, does not trade below this yellow line, there is no added requirement on the part of the big traders to add short futures to cover for those short positions. So it is still gone short gamma, especially, okay, after the trading activity of yesterday. That would mean, okay, that there is a lot more short calls. So come contrast this, okay, to what we had earlier last week. So especially, okay, on the 19th and the 20th, the market, okay, went long gamma over here, and that was, okay, long calls, okay, coming into this market, and the market, okay, drove higher. But since then, okay, there is a small change, especially, okay, over Friday. So you need to pay attention to this zero gamma line as we progress during the season. Now these are dynamic levels, guys. When I say dynamic levels, they are levels intended, okay, to change with the moves of the market. So this is a derivative market cycle, and this requires daily attention. So the market is not the same on a Friday, and it's not the same on a Monday, Tuesday, Wednesday. So what you knew about the market on a Friday may change on a Monday, and what you knew about the market on Monday close may be different, okay, at Tuesday open. So that's why it's called a market, and that's why, okay, the probabilities of the what the market can do keep changing. So you should never enter a derivatives market with an old view. Okay, what has happened on Thursday, what has happened on Friday is in the past. You should always be looking to know what the market can do next. So this spectrum adjust for the inventory which is already in the market, and that is why those levels are dynamic, and they update to you in real time, telling you what the market is thinking up ahead, and especially, okay, the days, okay, leading to the weekly settlement. This is all working on the weekly Thursday settlement for the Nifty futures, right? We'll close with a look at where the Bank Nifty spectrum is. So the Bank Nifty spectrum is above the zero gamma level all of last week. So that tells you that there weren't a lot of short calls, okay, into the market, or the market, okay, did not have to go into short futures, right? But the range over here is still about 46,500 on the upside, and about 45,500 on the lower side. So that is where the option inventory of the market is changed. So since we've spoken about options, let's just close up with where we are from an option inventory point of view. So this is the OY split chart, which is the entire OY picture, and through the end of session on a Friday, the 19,900 was the biggest strike over here. 20,000, okay, is very strong. So there was a lot of call writing in the Nifty, especially, okay, in these things. And if you want to see what specifically happened on Friday, then this is the OY change chart split. So the put inventory, okay, came off at 19,900, and the call side, okay, was heavily dominant on 19,800 level. So this is the Nifty. And if you want to look at what the Bank Nifty is, so that's the Bank Nifty OI Viz charts. So here you can see, okay, that the 46,000 PE is stronger than the 46,000 CE. And specific to Friday, what really happened was the put inventory, okay, stayed where it is. The calls, okay, have written the higher strikes above 46,300 odd levels. Uh, we have, okay, what we look at in terms of gamma positioning of the market, we call it sensitivity. And if you look at where the market, okay, is choosing to work with, the heavy writing is at 19,800. So this is the sum of sensitivity and 19,900. Now if you want to see, okay, what exactly is happening over there, then you need to go with a sensitivity split, which tells you that the call side is kind of heavy at 19,900. The gamma wall of the call writers is heavier at 19,800, and the market put in a lot of call side writing at 19,900 on Friday. So this is the Nifty sensitivity. So you could get all of this information on this screen, right up to the left of this thing. The charts I'm looking at is charts.vtrender.com. So I hope you found this useful as you build into this week. This is the information the market is currently priced at and pricing in. If there's anything changing, we will update you. Thank you for listening in.